Fixed assets and accumulated depreciation. Suppose I buy a car for 100,000 Rand. After 3 years, the vehicle will no longer be worth 100,000 Rand. Vehicles decrease in value. But how do you show the correct value in your books, but still comply to the historical cost principle? Your answer is accumulated depreciation. Accumulated depreciation is a balance sheet account. That's one of the rare negative asset accounts. Negative means it increases on the credit side. Accumulated depreciation's sole purpose is to reduce the value of fixed assets in our books. Accumulated depreciation should always hold a fixed assets account's hand. So, the vehicle account's body will be accumulated depreciation vehicles. The equipment account's body will be accumulated depreciation equipment. These two friends together ensure an accurate value in the books. This brings us to a new term, carrying value. Carrying value is the same as book value. That's the physical value of an asset. Carrying value is the difference between the cost price and the accumulated depreciation. Do you remember our two friends? In other words, carrying value is the difference between the two. After all, the fixed asset account should always be recorded at cost price. His body is accumulated depreciation. The carrying value at year end is the amount that must appear on the face of the balance sheet. Note 3 is a summary of these two friends. Let's take a look at the format of the accumulated depreciation account. The opening balance is recorded on the credit side because it's a negative asset account. The second entry on the credit side is depreciation. What did the asset reduce in value this year? In grade 10, we usually only work with two calculations here: the depreciation of our existing or old assets, and then the depreciation on any asset we purchased during the financial year. Add the two together. In grades 11 and 12, we need to calculate a third piece of depreciation. When we sell an asset, we still have to work out the depreciation for the few months of the year that the asset was in our name. Show this entry on the day the asset was sold. The total depreciation of the sold asset for the time it was in our possession is on the debit side. The contra account is asset disposal. It includes the current year's depreciation, which you showed on the credit side. In other words, we extract the total accumulated depreciation of the disposed asset from this account. So, when it comes to asset disposals, the total accumulated depreciation of the sold asset is entered on the debit side. Only the depreciation for the few months during this year that we owned the asset is entered on the credit side. Now we can balance the account. Lastly, do you see the two depreciation entries on the credit side is now in red? I make it red so you can remember to be careful. Only the depreciation you calculated for this financial year should be recorded here. If you ever do a sum and use more than 12 months in your calculation, you know it's wrong. These entries are for this year only. Thanks for watching. Your homework is to review and learn the format of the accumulated depreciation account.